What's going on, everybody? Time for another YouTube recap here. I want to speak about what was going on today in the market as we're coming off all-time highs for the market. As I do get a little slower with cancer treatment, you'll have to bear with me as my persona here might be a little lower. So looking at SPY, we had the force up in all-time highs, right? We suffered another gap up here this morning. So what you're seeing is price action above that little dotted orange line. That is a gap up over yesterday's highs. Now, we did not fill this gap. If you look really close through the afternoon, we actually had a little bit of a dip very close to it. We did leave a little bit of a sliver of price action. If you caught my last video about gaps and about using them on a 5-minute scalping chart, I'm going to show you what today, as an example, was. And if you didn't catch that, I'll put that video in the description below. Check it out, and you'll see what I'm talking about here. So per the video of yesterday, we have this 5-minute chart, and whenever there's a gap up, right, price action opens up. There's no pre-market, no nothing here, just live. So we have our first 5-minute candle, and here's the close on Friday, right? So we're going to gap up the open from the high, because I like where the gap starts, okay? Now, we don't really have an area of exactly what the gap's going to be at open. We just go with the 5-minute candles open for this scenario. And tomorrow, as we get into these fibs further, they will still be capable of being used because now we have a gap that is made by the 5-minute chart above it. So it works out. So let's take a peek at this real quick. So this was today's price action start. So like we said on the Fibonacci, we'll gap out the 100 to the 0% fib. When price action stays above the 100, we'll come to the 1618. And then if we do pressure past that, we'll usually go to the 2618, right? So we don't have a catalyst to be moving up, FOMO melting all time high until we start getting into earnings, Powell, so on and so forth. So this is just going to be TA. This is no psychological sentiment at all. Now, when we seen the pullback, we knew, and I posted on Twitter here, at least we assumed, I shouldn't say no, because nobody knows anything in the market 100%. We look at Twitter this morning, I said, we're going to have a move up to the 2618 here on SPY. So this is Friday's close right here. And I said 484.94, just about, you know, the last fib level I have on the melt up all-time high for SPY, watching for a tag there and then a directional digestion through earnings in Q1. So we pushed up to, and I said 484.95, we pushed up to about 45 and a couple pennies, right? So this was the Fibonacci, and you can see on my other chart here, right there, that purple 44.94. Now that is January 8th, the body of that candle, Fibonacci here, pressed to the upside, and that is the max 2618. So we were looking for a pop to drop this morning, okay? So back to our initial open on how to play these gaps. So the 5-minute came up and pushed, and then we had a lot of resistance kind of come in, right? So what we usually do for a setup is we're going to find our open, we're going to find our gap, and we're going to utilize the extensions to play direction. So right now we need a pop into the 1618, and the target I had posted prior to the open, which is about 485. And once that hits, that's 2618 on a giant January candle. So there is a probability of a pullback there coming into major daily body Fibonacci that we just done. And now we have it matched up with a gap. So we have two gaps, right? The 5-minute gap that we use for scalping and a very large 2618 at 485. So as that price action pushed over the 100 fib, we had a great resistance zone. So we shorted that in the first target. You come back down to the 100 fib, right? And if it starts to hold that, we can come back up and do pressure. If not, it breaks back into the box, right? And like I said, check out this last video that I posted. It'll be in the description. It'll explain this box and the Fibonacci. So we have the box. Now where does it go to from here? Golden pocket, right? So above, oops, forgot the arrow, above or below the 50 fib is the golden pocket. Now the short was here, and there's two targets here, one for the 100 fib, two for the golden pocket. So that is a plenty of points right there, especially trading ES on the way back down. Bounced up. Where did it go? Stuck in the box. Still on the 100 fib. Top one, top two, top three. Could not move outside the Fibonacci box, so you're still looking short. Lower, lower, lower. Now filled all the way to the fresh low bottom box. This was where the gap fill almost was during the live trading there. So yesterday's highs was not tagged, and it got picked back up. Now this is very common price action for something that had happened. We can leave this one up. for something that happened in a TA breakout like Friday, where we assumed all-time highs, we called all-time highs that day. So we get a monster day like this on Friday, and then we have an opportunity to have just an inside, back and forth day if it opens up under yesterday's close, or it opens up in a gap up and still gets a chop day. Now, generally what we see here is we'll have a day where 1, 2, 3-ish, nothing is perfect in the stock market, is going to have a pullback near this. Now let's look at our pullback and what we're kind of looking for. And this is going to be dependent on earnings, as we said before. But how would I set this up? How would I play this next play, right? Well, I'm going to take the body of Friday's big breakout, similar to what I did on January 8th, because we have a very monster high volume candle here. Whoop, mouse freaking out. And then I'm going to utilize the Fibonacci from this candle. Now I have another body candle, okay? And I also have a 5-minute gap. I got to pay attention to both those on different charts because these are different utilizations. We had the body here, so if it opened up, we had a chance to go to its 1618. We did not tag it, so this is still going to be a primary target for a long once we get the setup. Now, here, we're going to drop down for those days. Now, if we open up, below the body here, or even, back down, and we start coming back down, we're going to look for this body's entrance. Okay, so two things are going to happen. We're going to come back down, fill the gap, and we're going to close above 482.42, which is the 100 fib, which is obviously Friday's close, and we have a chance to continue right to the 1618, and that would be target long if the 100 fib becomes support. If okay, these are not perfect calls. 1 day, 2 day, 3 day-ish, now we could have a fourth, is what you want to see if we break inside the box of the Fibonacci, which is obviously the body. Then we have an opportunity to stay under the 100 fib down to golden pocket 1, golden pocket 2, and this is a general major support area. Okay, and then you look for the temporary long to come back up to the 1618 and magnet to, who knows, 500. We'll see what earnings has to say. But this is the prediction for the rest of the week. So we're going to do these two things. We are either going to come back down, tag her on the 100, mess around a little bit, chop it, and we're going to come back up to the 1, or we will stay under and get confirmation intraday with the VIX. And we'll show you that next, and we'll come back down to this target right here. So those two targets right there are for the Fibonacci, okay? For the long term, the macro, not such a day trade scalp. Now we're going to come into TUS here real quick. I'm going to show you for this gap fill right here, right? We did not have a fill, right? So again, if we open up, let's go to 5-day 5 real quick. And this consolidation takes time, still going sideways, right? Because the FOMO, MOMO, and blown out shorts is the epitome of what the market loves to do. So with no fill here, we have an opportunity to kind of be above that fill and then go. Sure, great. That's going to be yesterday's highs. But if we end up under it and we leave a gap right here, and this is left open, okay? And this gap between yesterday's highs and then whatever we open at today, if we open up under yesterday's highs, we start breaking into that candle, we're going to be watching that 666 for the day trade. 5 minute, okay? That's the purple dash line there. And so on and so forth. Now, I'm kind of leaning to more FOMO melt up. We'll see what Netflix has to do. But our last catalyst that we have to talk about is the volatility index. So I mentioned this morning as well. I've mentioned this a million times. This is our daily gap. This is a huge gap in the box still that VIX has to do. So I said the VIX has an opportunity to jam down and fill, but what does it have to do first? Well, it has to stop the deviation swap. So right now, standard deviation puts us in an uptrend. You can see all the bars are in an up direction. And we have a green bar here instead of red, so it means we are still in an uptrend. This makes it harder for the VIX to sell because of the deviation uptrend, but it doesn't mean it can't. It just means the market has a harder time with this. So once the VIX gap fills, okay, and this is a big daily fill, we've talked about this one before, right here. So this is between 12th and 16th, right? Gap up to the weekend last. And once this fills, comes down to its deviation center, we're going to see support in the VIX. So for option number 1 for me, if the VIX fills and starts to pop, even if it is a lower high, the temporary pop of the VIX is going to create the day trade or more, right? 2 to 3 day red, maybe 3 to 4 that we had just talked about here. So we're going to look for a VIX gap fill to bounce support on the VIX. while the VIX is going up, the market can put in a couple day reds back to support. So that is the sentiment in day trade for how we're going. Now, we had a nice little $600 green day. We'll go over real fast what the day trades were for me, and they were popped to shorts here at the open. So I just took the shorts that I just mentioned, the 1618. So if I go back to my default here, it shows you where that 2618 is. And I shorted into here for lots of high pace scalps. I didn't do anything pretty crazy. I did like $1,000 on our Apex accounts, not the PA funded accounts. We have a bunch of 50K accounts I took out to kind of run this up, and we're up $1,300 on those now. They got to make $3,000 to turn them into PA. So our 3 PA accounts are still up and over. Now they are all over 3,100 again. So again, my Twitter post, you can see we withdrew 7,500, 25, 25, 25 from our 3. We are back over 3,100 on all 3 accounts. So we're going to do another $7,500 withdrawal coming into February. Granted, we keep them open and everything goes well. And for now, the other 2 day trades that I took were long scalps off volume profile. Now, volume profile always calculates back and forth throughout the day, so it's not going to be perfect, but price action that stays outside of profile high lows. Here's a volume area low. Here's volume area high. When price action is outside of these metrics, you have an opportunity to find the opposite move. So when the short came all the way back down, and let's say you had missed the short and you didn't get a fill there, and you wanted to partake in the trade, well, you would wait till volume area lows, support was snapped down, and it would hit a viable support resistance. And in this case, in this scenario, the dump came all the way down to the penny of our pre-market low. And we always have an automated indicator that puts out high-low pre-markets for us because they end up being such great support and resistance for the day. And again here, let's take a peek at that first opening trade. Here's volume area high. Does my drawing tool do that? Right here on the orange. Here's pre-market high. So 2 things that we are above that need to be back tested while we are slamming into a huge 2618 resistance. That's the catalyst. So just like our last trade, the pre-market low, scalp long, this was the support resistance, the large, the key, the unique, the whatever you want to call it, use your word, that is the major support. When something is underneath that volume area low and hits a very strong signal of support resistance, just like this one did, we are up in resistance, hitting a 2618, and it had to come back down to the volume area high to retest because we cannot stay outside of those deviations forever without catalyst. Now, sometimes we can. It's called an algo force up. I'll give you an example. Yesterday, right? We had an algo force up there late day where it squeezed up. And if you were on like a minute chart and cruising back here, you would have been back here at volume area highs and it never would have pulled back. Volume area highs would have just kept recalculating over and over. Now, algo buys, as you can see, the anchored VWAP here, this is +2 deviation on a VWAP. Here's the center. Here's the -2 in the blue. Look at that price action stuck. Now, these algos have these programs, they run like that, right? And generally speaking, these programs run when it hits a pinnacle support resistance. And how do you find those? Well, the algos and pre-markets that we use are the ones that identify those a lot of the time. This is an algo switch. This is an opportunity, not a guarantee, an opportunity where the body of an algo candle that is set in pre-market, or a bar like this that is set in pre-market, a direction outside of the range or the body, right? So I use the body, here's the lows. So if we were outside the lows or outside the body, here again, outside, those have an opportunity to swap. So if the sell algos were just accumulating, okay, and that is in between this huge algo bar and this guy, and this is the in between. You can look at price action stuck in the in between. But the second we started trending a little bit outside after all these higher lows and higher highs, we broke out of that algo. You can see it as a gray box. In that gray box was the point of interest where that sucker went hot and never pulled back again, right here. Resistance, 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 broke out. Holy moly, she's gone. Okay, so that's an algo swap. Those computers have certain buy points where they will signal buy, sells, trend changes, and they'll do it all on their own. But these little pre-market after hours seem to be very reputable to when and how they can do that. And some of the times you can get those to fib out as well. So just for a quick, I haven't done this yet, but just for a funsies, we can take this entire candle here and test where this was. Oh shit, exact top of the market today. Well, I like when that happens. So we took a algo candle after hours and pre-market. This is why I love to use those so much. We put a fib on it, and it picked the exact penny, 1618 of the day, and it has to retrace to the 100 fib. Did it do that yet? Nope. So you can suggest a open on ES today at 5 p.m. Central, and I'll probably go down just because of that algo. Interesting stuff. I hope that helps out, and I'll see you guys on the next recap.